Hello Internet people, TradeModeJames here with Zone Trading Group. Today in this video, I am going to reveal to you the secret sauce of supply and demand zones and how to use them properly. Basically everything that the smart money hopes you never find out. After watching this video, you should have a solid fundamental understanding of how supply and demand zones work so that you can be in the 2% of retail traders that actually make money in these markets. I see a lot of supply and demand videos on the internet with a lot of solid information. But a lot of these creators fail to realize that most traders searching for this kind of content are new and lack the ability to understand the information given and how to apply it. My goal with this video is to make the most basic but fundamentally detailed supply and demand zone price action video on YouTube. Alright guys, before we jump into the charts, there are 4 keynotes that you guys need to know about supply and demand zones. Number 1, why should you use supply and demand zones? You should use supply and demand zones because they allow you to see areas on the chart where price has a high probability to reverse. Having knowledge of these zones gives you a sort of Nostradamus type ability. All right, being able to see where the smart money has moved the market in the past gives you the ability to predict where they will move it in the future, allowing you, the retail trader, to capitalize and make a profit. Number 2, what are supply and demand zones? Supply and demand zones are areas on the chart that show you where the smart money is stepping in and out of the market. These zones present themselves in the form of candles, leaving an area very quickly and aggressively, making it obvious that smart money is moving the price currently and not retail traders. Number 3, how to identify supply and demand zones. To identify supply and demand zones, you must be looking for areas where price action has left an area very quickly and aggressively. So quick and aggressive that it simply cannot be retail traders moving the market. Only smart money, the real money, has the ability to move markets like this. And being able to identify when they are entering and exiting the markets is an invaluable asset in trading. Number 4, how to draw supply and demand zones. Once a supply or demand zone is identified, the next step is drawing the zone. This is very important. Always use the beginning of the aggressive selling or buying zone's original candle and draw your zone from the wick to the body. All right, guys, now that we have gone through the keynotes of supply and demand zones, we are going to jump straight to the charts and backtest some of these zones. I'm going to give you guys some really good examples of supply and demand zones. I'm going to show you how to draw them in, how to identify them, and how to trade off of them. Before we do that, make sure you guys hit the like button on this video, obviously. Make sure you hit the subscribe button if you're not a subscriber to my channel. And all of you, please turn the notification bell on to get notified when I drop a new video or when I go live. If you guys want to be in the Zone Trading Group, please send me an email to zonetradinggroup@gmail.com or send me a DM on Discord. All right, let's get right into these examples. All right, guys, this is actually a good example. We're going to jump right into this one and show you guys how my mind is working here. So what I would have seen here is, number 1, I see a supply zone right here, okay? I would have marked this up for sure on my chart because price came down. It came back for a pullback, and then it left really quick, all right? So we would have had this marked on our charts like this, all right? And if I pull this to the right, you're going to see that when price does come back to this zone, it falls off, all right? That is because there are still orders here left to be filled, all right? And that is what happened here. Price came down. This is a 5-minute time frame, just so you guys know, on the US 30. Price left real quick, all right? We wouldn't have caught this trade, all right? We would have not been in this trade here, but we would have been ready with this zone. So when price does finally come back up here, we were ready for a trade, and we would have made some money on this trade. Now, there's a demand zone here as well, all right? You can use this zone, but this actually isn't the right zone, all right? We want to use this zone right here. All right, this would have been the zone to use. And next time price came back down to the zone, what happened? You scalp here, you come in the market and you make a lot of money. How do I know this is a demand zone? Because price came down and left real quick. Now, you might ask, well, did it here too? Yes, it did. And if price ever came down to this zone, you could come in for a scalp as well. And the same thing here. All right, there's no difference here. These are all demand zones. These are all areas on the market where the banks have moved the money in their favor. Now, this is the US 30, so imagine how much money it takes to move this up and down. All right, these are not retail traders making the chart jump like this. These are the banks, and these are the banks dropping it as well. So this is how you use supply and demand. You identify these zones that the banks are using, the smart money, and you follow their trades, guys. And the only way to do that is to identify these supply and demand zones and be ready the next time that price comes back to that zone. So like I said, let's recap here. We found our supply zone here. Now we're patient. Now we're playing a video game. Now we're eating some food. We're walking the dog, whatever. We set an alert here at this zone. Next time price comes back up here, we are ready to enter a trade for a sell to go short, all right? And you make money. And we have located the next down demand zone. And guys, you could have used this one too, all right? This is not the worst zone, but in this zone, you might have lost some money and got stopped out here, okay, if you use this zone. And, you know, that's how the game works, right? Sometimes you find the really, really good demand zones, and sometimes you find the okay ones that potentially could stop you out if you have your stop loss set at structure, which this would have been where the stop loss is if you were using this zone to trade. So if you did trade off this zone, like I said, your stop loss would have either been here at structure or at this zone right here. And if you did have it set at this zone, which is where I would have put mine, I would have got stopped out on this trade. All right. And that's just kind of how the game works. Let's find another example here. All right, guys, here's another great example of supply and demand. And guys, it's crazy because when I'm back testing this strategy and I'm back testing my zones, it's hard for me to find, you know, the right example because there's so many of them. You can just do this over and over and over and over and over. Anyways, guys, so we're looking for areas on the chart where price has left really quickly. All right, so here is a nice supply zone. Now, what happens next time price comes up to the zone? I mean, it's so easy to see. This is not that difficult. All right, price comes up to the zone and it leaves with the quickness. All right, we got the retest. Now, you got to decide if you're a breakout trader or a retest trader. All right, that's kind of what you need to decide because once you make that decision, you got to stick with that rule, okay? You got to stick with it. If you want to have the 80%, 90% win rate, you can't have variance in your strategy. You got to stick with that strategy and do the same thing every single time. So here, if you took the trade in the middle, which is where I'd like to take it, if I'm not taking the retest, all right, we have some slight variance to the top of this zone, all right? And then inevitably we come down and we make money on the scalp. Now, it's not that easy on this trade because look what happens. If we zoom in here, you're going to see we come down and then we come back up for the retest. A retest trader is taking the trade right here. All right, we're taking the trade right at the touch of the zone on the retest, and they're not going in any drawdown. It's the safer play to take the retest. All right, you're not going to get as many trades taking the retest, but it is the safer play. The retest gets you where you need to be, okay? And you take profit down here at structure. Right here, you make some nice gains on this trade. Whether you took the trade in the zone or you took the retest, you make good money on this trade. Now, even over here to the left, guys, there's another demand zone trade that I saw while finding this. All right, price came down, and actually we could have made money 2 times on this trade. All right, price came down out of supply, formed a double bottom candlestick pattern here. All right, we draw our zone in. All right, boom. And we're going to pull it to the right, and what we're going to see, 2 touch points here, all right? Easy money. Price spiked out of this zone. We know this is demand on the 15-minute time frame, and price came back to our zone. We entered in the middle of the zone here, and we made gains all the way up to structure right here, all right? That was a good profit. That was a really, really good profit. All right, that was a great profit, actually. Whoops, pulled the wrong tool up there. That was a great profit because right here, when we're entering in the middle of the zone, all right, our entry point's going to be right here in the middle. We're going to set our stop loss about right here at structure. So on this trade, if we hold to where we're supposed to hold, we're getting almost 3 to 1 on our money, all right? Basically 3 to 1 on our money. That is really nice. That's a good trade. All right, and again, price comes up and we wait for price to come back down again. We hit it again, and we don't make too much money on this one, but we can scalp a couple bucks off this second touch. And I recommend new traders use a zone one time, all right? Don't sit there and wait for the second, third touch points. Use it one time, make your gains, and then wait for the next setup. Go to the other charts. You know, if you're trading Forex, go to another pair, get off the US 30 until you find a proper setup, all right? But this was a good example right here. Let's find another one. All right, guys, I found another example on the US 30. We're using the 15-minute time frame. Right here, we're finding demand. All right, price came down out of supply and formed a demand zone here. So we would have this drawn in at this point. We probably would have seen this happen when price was about right here. So we knew that it spiked out of here. So we would have had this zone drawn in, pull it to the right, and what do you see over here? Next time price came down to this zone, all right, it left really quick, and you could scalp this and make some gains. Right now, this took about, let's see, this is a 15-minute time frame. So November 18th, and this was November 19th. So like I said, you would have had to wait about a day, all right, to get this trade. But you can come in your charts and set alerts and have these zones drawn in on multiple charts and just have your zones ready, so you know that when price starts coming down to a zone you found, you can be ready to enter a trade. And right here, you would have got the alert. I would have probably set an alert somewhere here, up here where price was getting close to the zone, and I would have been ready for the trade, when it happened. And you would have made some money on this trade. That's a really good trade. Now, you would have went into some drawdown because I would have took the trade right in the middle here, all right? And I would have went into some drawdown here, but not much. And to find structure on a trade like this, we would have to zoom out, all right? And look to the left pretty far to be able to find structure. And you can see here, structure would be somewhere about right here, all right? Right here. So this would have been where I would have put my stop loss. And you can see here that on this trade, all right, let me get back to where's it at? Oh no, there it is. On this trade, I would have went into some drawdown here, okay, but I would have not got stopped out. It would have been close. All right, and I would have probably been like, oh man, I'm about to get stopped out here. That sucks. I got to find a new trade. But I would have went back up, okay? So like I said, never just cut your trade short, all right? Stick it out to the end. That's a really solid piece of advice I can give you guys because I learned the hard way. I used to go into drawdown like this, and it would get close to my stop loss, and I'd be like, oh, I don't want to lose that extra $100, $200, and I would just close my trade and take the loss, not knowing that a lot of the time it won't actually come all the way down to structure. And from this area here, it found support and put you back at break even, and you made money if you would have held this and just let your stop loss do its thing. So that's a good piece of advice for you guys. If you're going to set your stop loss at structure and you had confidence and conviction in the trade, let it play out. You win some, you lose some. If you do the same thing every single time, you will be successful and you will be profitable, all right? This was a good example. Let's find another one on a higher time frame so you guys can see that you can do this on any time frame. All right, guys, for this example, we are on the US 30 on the 4-hour time frame, a higher time frame. And I recommend new traders probably try the higher time frames first. The 1 hour, the 30-minute to 1 hour is always probably more a safe play because there could be some variance in these shorter time frames just simply due to market volatility. Now, this is a nice demand zone here. So price came up. It formed a demand zone here too, but we're not using that one because we're back testing, right? And we see what happens. And even if we did use this one, it just took longer for price to get down to that zone, but it did come down to it. So for the sake of the video, we're going to use this one where I can see price came down fairly quickly. All right, so demand zone here, boom, drawn in, wick to body, and we wait. We set an alert somewhere here. When price comes back below that alert, it's going to tell you, hey, price is headed towards your zone. You got to get ready for a trade. Price came down to our zone, came basically right in the middle, and we had a huge spike out of the zone. That was a nice trade. You're asking, where would I put my stop loss? I would have put my stop loss at structure right here at the zone below. All right, and that would have given me a, let's figure it out here. If I enter here, okay, right at the middle, I set my stop loss here at structure. All right, and we take profits at structure, which would put our take profits somewhere around probably here, to be honest with you, a little lower than I would like, but I probably would have took profits somewhere here when I saw the end of this double top, or I'm sorry, this big green top, the top of this big green candle. So right here on this trade, we're getting roughly 2 to 1 on our trade, a little more than 2 to 1. I don't know why this says 1.77. It seems like, I mean, if I use my fingers here, yeah, I guess it is 1.77. So you're getting almost 2 to 1 on this trade. That is still a good trade. Even a 1-to-1 trade is not the end of the world. A profit is a profit, right? And so, like I said, this is another good example of how you can use supply and demand to scalp and make money. All right, guys, gonna give you guys another example here of supply and demand zones and how they work. This time we are using Apple, the stock, as our example chart here, and we are on a 5-minute time frame. So I just want to show you guys that this can work in any market, stock market, futures, or Forex and crypto even. All right, this works in any market. You just have to be able to identify where the smart money is moving the chart. All right, so what do I see here? I see price coming up to a point, having a slight pullback, and then just leaving really fast. That's a demand zone. We'd mark it up here. We don't have any wick here, so we kind of just gotta wing it here on the zone. But if we pull it to the right here, all right, you can kind of see that in this area we really could scalp 2 times off this zone, all right? Number one, we wait. This is a 5-minute time frame, all right? So we had to wait, a little bit, nothing crazy, all right? You do these 2 trades in the same day. But you would have your alert set, all right, and when price starts headed back down towards your zone, you get ready and you would enter a trade at the top, I guess, here if you wanted to. You might have missed this trade because it didn't actually come down into the zone. So you potentially would have missed this trade if you're not an advanced trader and you're not using other indicators and forms of technical analysis to tell you when to enter and exit a scalp, all right? So if you're just using supply and demand zones, then that's it. You probably would have missed this first trade. But the second trade, the second time it came back to the zone, it came deep in the zone and formed a double bottom candlestick pattern here, which is a reversal signal, all right? And we know that we're probably likely going to get some movement off of this zone. Now, what happened was if you entered the trade here, all right, you would have had some drawdown on this trade, all right? You would have had some drawdown, and that, this might have scared people out of their position, but if you're setting your stop loss at structure, all right, at structure, which I would have put my stop loss, let's see, I would have probably put my stop loss somewhere about right here, okay? We would have not got stopped out. We would have not got stopped out. It would have came close, but we would have got back in the zone and made a substantial amount of money on this scalp. And like I said, if you're putting your stop loss at the right spot and you have conviction in the trade and you know that you have located and identified a valid supply and demand zone, then you let the trade play out the way it plays out. If you get stopped out, it is what it is. You move on to the next trade. But this is another good example of why you should never close your trade until you get stopped out. And if you're using proper risk management, then that's not going to be that big of a deal, right? If you're not okay with losing, 2, 3, sometimes even 4 trades in a row, then you're risking too much money on your trades and you're probably over leveraged, or you're just risking too much money that you're potentially not really willing to lose, all right? I don't do that. If I lose 2 or 3 trades in a row, I'm okay because I'm not risking more than I'm willing to lose, first of all, and I'm using proper risk management based off the size of my account. All right, and there's a lot that goes into that. We'll talk about that in another video, but just know that if you set your stop loss at structure and you're using these supply and demand zones in the right way, then you would have not got stopped out here. You would have came back up in the zone and you would have made a lot of money out of the zone. All right, let's find one more example for you guys. I'm going to do it on a Forex chart, so let me find it real quick. All right, guys, this is the last example I have for you in this video. We're on the USD JPY chart. This is a Forex chart. And like I said, guys, you always want to be trading off key levels, okay? But for me, sometimes I don't want to wait, hours and hours and days for those key levels to get hit. So what you do is you find the supply and demand zones within those levels, and they're everywhere. It's a little bit more advanced to be able to find these valid zones, all right? But there's a great example here of 2 zones really close to each other that I want to show you guys, all right? So this is a 5-minute time frame, so we're scalping here, all right? Wick to body here, pull to the right, all right? Now look, price came down, it came back up for a pullback, formed this double top here, and we had a nasty drop off right out of this zone, just straight down, big movement. I would have had this chart, I would have had this zone marked up on my chart, and next time price came back up to the zone, I would have been ready for a trade. We get a nice scalp here off this touch point, okay? Price came back up, touched kind of close in the zone, all right? But like I said, it depends on the kind of trader you are and how you feel comfortable entering the trade, all right? I like to enter in the middle, all right? I like to enter in the middle, but sometimes I'll enter at the touch, depending on RSI and a few other things. Or sometimes I'll wait for it to, if I think there might be some variance in the zone, I might wait for it to come up here and come back down into the zone and enter on the, when it comes back down with the wick, and then it drops back down. Here it touched the bottom of the zone and just kind of just fell right out. So if you entered the trade at the zone, basically, you would have made some nice money here, all right? And on our trade, we would have pulled let's see here, if we enter right, at the bottom of the zone, and we set our stop loss at structure, which would have been somewhere about right here, all right? Looking to the left, finding structure right here along this line. All right, we would have had our stop loss set about right there, and our take profit would have been down here at structure, somewhere about right here. Let's see, try to make this as accurate as possible. Somewhere about right here, okay? And we would have gotten almost, let's see, what is this? 2-1 on our trade. We got basically 2-1 on this trade, all right? And that's a really good trade. If you're getting 2-1 on any trade with a valid setup, that is always a good thing, all right? And this is the way, guys, that you use supply and demand. And I kid you not, it is overcomplicated in the world today, all right? Trading. People make it so complicated, and it's really not. All you got to do is identify these zones where the banks are moving the money, and you can sit here and scalp, day after day after day after day. It's never going to stop happening until the market just disappears. There's always going to be banks, hedge funds, smart money moving in the market in their favor. And if you can identify their zones, you can get in the market when price comes back to that zone. And I would say probably 80 to 90% of the time, it's going to be in your favor if you do this the right way. All right. This is another great example of supply and demand on a Forex chart. Getting 2 to 1 on your money. All right, my zone trading friends, thank you very much for watching this video all the way through, and thank you to those that skimmed through as well, okay? If you guys found this content valuable and knowledgeable, and you guys learned something here, or you just enjoyed watching the video, make sure you hit the like button, hit that subscribe button to become a subscriber on this channel, and hit that notification bell to get notified when I drop a video or I go live. If you guys want to be a zone trader and join my trading group, send me an email at zonetradinggroup@gmail.com or send me a DM on Discord. The link is in the description box below this video. Guys, I hope to make some more videos here in the near future, so definitely check back for those. And I had fun making this video, and I hope you guys enjoyed watching. Peace and love from my end. TradeModeJames with Zone Trading Group, signing out.